Hello again. My name is Joe Bloodgood, and I'm here with my partner Nathan Faith. Today we're talking about how to manage capital gains. Today we want to go over what we think are a few strategies when it comes to tackling what we consider a good problem to have. So the first thing you can do is simply hold on. If you hold your position for at least a year, you're automatically going to be able to move into long-term capital gains rates, which are a benefit from where they would be if you sold shorter than that. Next, we talk about soaking up the 0% capital gains bracket. For a married couple without any other income, figuring in the standard deduction, a couple can realize almost $100,000 in gains without incurring any federal tax. And then next, when we talk about tax bracket management, we're talking about an awareness of where you're at from an income tax standpoint so that you can take gains up into a point, but not trip over any of the higher brackets that may put you into an adverse tax situation.
Then we move on to two strategies in which you actually give your gains away to someone else. The first being charity. So we've had a prior video that walked through this in much greater detail, but you can avoid gains altogether by transferring your appreciated assets to charity while also still getting the full tax deduction. And also, you can treat people like a charity. So, for instance, if you give your appreciated assets to family members and they happen to be in a much lower or no tax situation, then they too can harvest those gains without paying taxes where you would have to pay a much larger tax bill.
So let's look at the final strategies that we have to cover today. The first one on the list is to consider taking advantage of something like a like-kind exchange or an opportunity zone. An example would be with real estate, where if you have a highly appreciated piece of real estate that you sell, you have a certain amount of time to actually replace that property with another piece of real estate and avoid that capital gain. Next on the list is to simply relocate. You can move to a low or no cost state that treats capital gains and income tax more favorably than your current one.
So the saying goes that there are two things we can't avoid: death and taxes. However, that's not the case with gains. If you hold your appreciated investments until you pass away, those gains in taxable investments are stepped up to the fair market value, meaning the tax and the gain goes away. And then finally, if you have losses in your portfolio, those can be sold to offset gains that you have also harvested to help manage and minimize your long term tax bill. Each of these strategies can justify their own separate video or conversation. If you'd like to learn more, feel free to reach out to us at learnmore@bouleygroup.com.